All right, before we get into the numbers, just the quick and important reminder, this is all for educational and informational purposes. It is not financial advice. Welcome back, everyone, to our daily DEX5 Bond Health Report. This is day 2, and it's a big one, because after setting our baseline yesterday, we now have our very first full day of data to compare against. So let's see what happened.
For the first time, we get to do a real, true comparison. We have a full 24 hours of data to look at, which means we can finally measure the change and see what's really going on inside these bonds. This is where we start to spot the trends.
So let's just get right to it, the main event. The question that I know every single bondholder is asking. Did the bond ratio, our true measure of performance, go up or down in the last day? And the answer is, it held perfectly flat. The bond ratio is sitting at exactly 0.0250 ETH, completely unchanged from day 1. Now let's unpack what that stability actually means. So, what's really going on here? Why was it flat? Well, think of it like a perfectly balanced tug-of-war. On one side, you've got the trading fees pulling the ratio up, which came in at about 0.16%. And on the other side, you have impermanent loss pulling it down by, you guessed it, about 0.16%. The result? A perfect draw. They canceled each other out. And this is absolutely crucial to understand. This is a neutral result. We're not losing ground, but we're not gaining ground either. It's a holding pattern. And you know, from a strategic point of view, the team actually sees these periods, when altcoins seem to be at a local bottom, as a prime opportunity for compounding. Okay, so while the ratio was flat, there was some fantastic news on the TVL front. The total value locked actually grew from $1.78 million to $1.85 million. That is a really healthy 3.9% jump in just one day. So where did that growth come from? Well, as you can see, the lion's share, a full $68,000 of it, came from the base chain. And this is awesome to see because it basically validates the team's entire strategy of focusing on that ecosystem to get the best trading volume and fees. If we break that down even further, there were really two things that drove this TVL increase. First, the price of ETH itself went up by about 3.2%, which of course makes all the assets worth more in dollar terms. But since the TVL grew by 3.9%, we know that new deposits from users also came in. Now this brings up something that can be a little confusing. If you looked at your position in US dollars today, you would have seen the value go up by 3.2%, from about 76 bucks to over 78. And you might be thinking, hey, the bond performed great, but let's clarify what really happened there. Here's the math, and it's pretty simple. On day 1, our 0.0250 ETH bond times the price of ETH equaled $76. On day 2, that exact same 0.0250 ETH bond times the new higher price of ETH got us to $78.43. The only thing that changed was the price of ETH itself. The bond's performance didn't change. The absolute best way to think about this is like Celsius versus Fahrenheit. They're just two different ways of measuring the same exact temperature. The bond ratio in ETH, that's our Celsius. It's the true scientific measure of the protocol's performance. The USD value, that's Fahrenheit. It just fluctuates with the market weather. We're watching Celsius here. Okay, let's do a quick check-in on our watchlist tokens, EDL and LMTS, since they have the highest exposure. And the news is great. Both of them are holding steady. Vault data shows EDL was stable against ETH, and the LMTS price was basically flat. So we're giving both a green light for stability. And that stability brings us right back to the team's core strategy. Think of it like dollar cost averaging into a stock. When they believe an asset is hitting a local bottom, they see it as a chance to add to their position. And that significantly lowers their average entry price, what's called their cost basis. Now, for all the Plasm holders watching, I know the most important question for you is the yield still flowing? And the answer is a big yes. The engine is working just as it should, and approximately $570 in daily yield is flowing uninterrupted to the BBB pools. So the bottom line for Plasm investors is really simple. Despite a flat day for the bond ratio itself, the core function, generating and kicking out that yield, is operating perfectly normally. The engine is on, and the fee flow continues. Let's wrap this all up in our Day 2 health scorecard. The ratio trend is flat, which we're calling neutral. TVL is growing, which is a big positive. The strategic focus on base is clearly paying off, and our high exposure tokens are stable. So the overall status is holding steady at a moderate health rating. And this all feeds into the team's two-part long-term strategy. It's really like farming. In the down markets, let's call it the winter, you plant your seeds by compounding positions to build up a larger base. Then, when the up markets come, that's your spring harvest, those bigger positions are going to generate significantly higher fee payouts. And that sets the stage perfectly for tomorrow. The key question for day 3 is whether this equilibrium is going to break. Will the fees finally win that tug-of-war, or is impermanent loss going to gain the upper hand? We will be watching very closely. So to recap the day in 3 key numbers, the bond ratio held firm at 0.0250 ETH. The TVL grew a very healthy 3.9% to 1.85 million. And for you Plasm holders, that daily yield of about 570 backs continues to flow. The protocol is stable, and the strategy is clear. Thanks so much for joining us for this Day 2 update. Please always remember that DexFi bonds carry significant risks, like impermanent loss, smart contract risk, and market volatility. So always do your own research. We'll see you tomorrow for Day 3.